Hey everybody, it's Scott from the Davies team here at Cross Country Mortgage, here with another Wow Wednesday, Words of Wisdom Wednesday. Today we're going to touch on FHA loans and kind of a little bit of the pros and cons, but basically the pros of the FHA loan. One of the big highlights is that the minimum down payment, we're only putting 3.5% down for the most part for FHA. The reason that's a benefit is because it allows you to get into a home now versus waiting that 5 years, 10 years down the road where you're trying to save 20% for a down payment. We're not going to get into in this video, but we're going to have different topics on the conventional loans and how to get into a home without 20% down as well. This FHA it's not just for first-time home buyers, but it is mainly a lot of folks that use FHA are first-time home buyers. And one of the reasons that is true is because of the minimum down payment. FHA allows for a little bit of a bumpy background. Let's say, put it that way. Lower credit scores, higher loan to value, higher debt to incomes, and it's not a subprime loan by any means, but it has kind of taken that place once the meltdown hit, and we had to find a home for folks that were credit worthy but had some obstacles in their past. So FHA is a great option for that. And again, mainly for first-time home buyers. One of the downsides of FHA is you can only have one FHA loan at a time. So if you're looking to move up, and you want to put a 3.5% down payment again, or if your family's growing, you can only have one FHA loan. So you're going to have to either refinance out of this current one, or get a different type of loan for that second property. There is mortgage insurance on FHA loans. The mortgage insurance is lower than conventional loans, especially when you get into the below 680 credit score down to 620, and FHA goes down to 580 or even below. But once you're at that 580, the minimum down payment for FHA is 10% versus 3.5. So if your score is below 580, I think the conversation that we need to have is how do we get that score up? And that's something that I provide for you guys as well. Debt to income. Conventional loans, we like to see conventional loans somewhere between 43 and 45, maybe up to 50 in certain circumstances. With FHA, it goes up to 55 or 56% on a case-to-case basis. Again, if you have that higher debt to income, we're going to want to put a different hat on and have a conversation about maybe sales price, or if there's compensating factors, commissionable income that we can't count but you receive, or a spouse's income that we're not counting that you have. Those are all compensating factors that help the loan look a little bit stronger. With 3.5% down, there's not a whole lot of skin in the game, which is why FHA is a government-backed loans through HUD. HUD and the government don't do loans themselves, but they do guarantee the FHA loan. It's a Federal Housing Administration loan. The reason for the mortgage insurance is that there's really not a whole lot of skin in the game when you're putting 3.5% down to buy a home, especially if the home's $500,000, $400,000, kind of like we have in our area. A lot of first-time home buyers, it's a huge amount of money. So the lenders are putting themselves at risk. So the borrowers who don't have skin in the game, the mortgage insurance coverage protects the lenders in case something does go wrong. And hopefully we're not putting you in a situation where anything will go wrong, but just in case, that is why the mortgage insurance coverage is there. FICO scores, again, we talked about that, range anywhere from 580 to 800. Even if you have a great credit score and great income, you can still use FHA. But there are some lender overlays. A lot of different companies, even though FHA accepts a 560 credit score or a 580 credit score, certain lenders might have an overlay where they require you to have a 620 or a 640 or a 660 or something like that. So if you have a 580, you might still have difficulty finding an approval through lending because of their overlays. So definitely make some calls and find a lender that you're comfortable with, and always start with me. That's always a good first option. If you have any questions, that's kind of the down and dirty on FHA loans. There's a lot more to it. They're very intricate, but they're fantastic programs for the right people. And I've always said there hasn't been a bad loan program in existence. Even some of the programs that we don't have anymore, those weren't bad loan programs. They were just bad situations for that loan program. And FHA is a fantastic tool for folks to use to leverage themselves to get into home ownership sooner rather than later. So now they're paying their own mortgage versus paying a landlord's mortgage. And now they're growing their wealth for themselves and their family versus somebody else. Appreciate all the time, guys. Have a great Wednesday, and I'll see you next week.